More on today's action. We are joined by Senior Portfolio Manager at AIP Asset Management, Bala. Jay, great to see you. Thanks for coming on the show.
Oh, thanks for the invitation. Always a pleasure to be here.
How do you feel about these equity markets right now? Do you feel they're toppy, or do you think we are headed for a fall?
Sure. I think overall we need to look at the backdrop, right? And the backdrop is, look, we don't really have that massive catalyst of the tax cut anymore, and now we've got sort of news flow in two buckets. We've got fundamentals and we've got sort of political noise. And if you look at the fundamental backdrop of the economy, I mean, the global economy is doing great. It's growing at like 3.9%. You've seen an uptick in U.S. economic fundamentals. The Canadian fundamentals are good. Mm-hmm. And globally, things are good. I mean, so what you're going to see is, for the next few weeks at least, you're going to see corporate earnings, and those corporate earnings are going to come in, at or above expectations. If not, they're going to surprise on the upside. So for the next few weeks, probably a month, that's going to be the good news, and I think that's what's going to rally the markets.
You think that probably will be enough to hold the market steady, these decent earnings?
Right. But the only concern is what happens after that, because earnings news is gone. You've got no more positive sort of news flow coming out, and now you're going to go back to political news, which is, who's starting a trade war with who? Is there inflation uptick? How is the Fed's going to resolve or sort of resolve that situation? And that's where you're going to see more of a downdraft, right? So, we've always said 2017 was sort of a buy and hold year. 2018 is a trading environment, right? Don't fall in love with anything. Mm-hmm. Just trade right through it. So I think for the next few weeks, load up on equities, because I think those are going to do great. And I think there's a lot of good news that's going to come out of it, both in terms of sort of earnings surprises, and as well as sort of positive forward guidance.
And if the Republicans don't do well in the forthcoming midterm elections in the States, presumably that won't play too well with investors either.
No. I mean, it might. I mean, you never know, right? I mean,
you never know. Yeah, that's right. Yeah.
Because what you've seen is, the market tends to ignore a lot of the political news nowadays, right? I mean, it's just become so fragmented, so sort of extreme as comments that people have just sort of said, nah, you know what? I don't really care. Mm-hmm. I'm just going to move on, right?
Tune it out, yeah. What about the Canadian dollar? It's had a nice rally. We've seen it trading up to around 79 cents. Do you think the loonie will hold on to that strength?
I think long term, I think it's going to hold on to it. In the short term, I look at it backwards. So, I think it's gone from sort of almost $1.30 to $1.25-ish as a zone. And that's happened over the last several weeks, which is a very strong run for the currency. Mm-hmm. So I think the next few weeks, you're going to see a pullback in that.
Largely dictated, well, often in the short term dictated by oil prices.
Oil prices, and also sort of that NAFTA clouds somewhat lifting. You never know. That goes back in sort of the political noise bucket, right? You never know.
We keep hearing that the Americans are scaling back some of their demands, certainly in autos.
Right, and I think they want to get a deal done. I think they want to show, at least for the midterms, that, look, we're still a trading economy. We can still get a deal done here, right?
What about the pipeline dispute, Trans Mountain Pipeline? I know it's not really investable except if you want to buy Kinder Morgan Canada, but what's your impression?
Yeah, for me, it's like I look at it from a practical standpoint. We invest in socially responsible investments. So, the way we look at it is oil is going to move anyways. The only difference is you're going to move it by rail right now, which is, A, dangerous, and B, it's not exactly economically or environmentally friendly. It is what it is. But if you look at the pipelines, it's sort of a one-time hit. It's sort of an investment in efficiency, right? You do it once, but going forward, you're going to improve safety, you're going to improve the economy, and you're going to improve the environment. So it's a bit of a no-brainer. That pipeline needs to get built. It's just all that political noise needs to go away, and somebody needs to sort of, I guess, maybe sit Canadians down and just rationally explain, look, this is a long-term commitment. And there's no other realistic technology that can move all this oil, which we have, to people that need it, right?
Russia, you're watching the potential effect of these sanctions on Russia. We've seen strength in aluminum prices,
right.
Other materials moving up because supply out of Russia could be curbed.
Exactly. And again, that's sort of a good news story for Canadians, right? We've got sort of a similar economy, or at least from the stock market perspective, we've got a lot of exposure to commodities. Russia provides a lot of resources, and obviously if that gets cut back, that's sort of great for us, right? So, that could be a positive upside again for us. So, the Canadian stock market could actually end up doing quite well in 2018 because of that.
How are you playing the energy space these days? Do you prefer Canadian or US exposure?
To me, it doesn't fundamentally make a difference. I mean, oil's oil, and it gets priced out in U.S. dollars anyways.
Yeah.
The only upside is, I mean, I really do think they're going to sort of sit down and say, okay, look, this pipeline's going to go through, in which case you're going to see a lot more upside in sort of Canadian oil companies versus the U.S. companies, which, those expectations are already built in, right? Like, you can't see too much more catalysts in the U.S., whereas at least in Canada, you've still got a large catalyst, which is that pipeline.
That's interesting. So that could be a case for putting a bit more money in the Canadian oil and gas.
Exactly.
And finally, what about the mining stocks? I mean, we touched on the potential for less metal coming out of Russia, but are you partial to the mining stocks these days, the copper stocks?
I mean, copper and cobalt, I mean, those go hand in hand. So, I mean, those are definitely a good play right now. But with mining, I mean, you got to sort of pick your spots. I mean, also gold, potentially, now that all the cryptocurrencies are selling off. We may see sort of a movement back to gold as that safety currency rather than Bitcoin or blockchain or Ethereum or something else, right?
Certainly, we've heard anecdotally that the cryptos have been attracting money away from gold, and the cannabis stocks.
That's right.
What about the cannabis stocks? Are they too risky for you guys?
No, I mean, I wouldn't say that. I mean, it just depends on how you play them. But I mean, look, I mean, it's definitely, I think, here to stay. I mean, unless something happens politically where they stop it. But look, once it's legalized, we know it's going to grow, right? There is a segment of the market that wants it. And I think there's, a good business case to say, look, I mean, this could be a heavy growth industry for us, right?
So have you put a toe into that market? Have you bought some marijuana shares?
We have. Mostly in sort of smaller cap companies, obviously. But yeah, I mean, there's a lot of upside in them, right? I mean, you just have to be able to handle the volatility.
Thanks very much, Jay.
No problem. Thank you so much.
Jay Bala has been our guest, Senior Portfolio Manager at AIP Asset Management.